My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. While the unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals, and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by a 0.25 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant.
Wow.
In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the market slowing in both the supply of and demand for workers is unusual.
Come on, Jerome.
In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal.
What's good, family?
Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months.
What's good, family? What's good?
And that, excluding the volatile food and energy categories, core PCE prices rose 2.9%.
What's good?
These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services.
I'll just break down what's going on.
Near-term measures of inflation expectations have moved up,
so we can see what's popping. You hear me?
This year on news about tariffs, as reflected in both market and survey-based.
I see y'all.
Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal.
Come on, Jay.
The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026
Let's do this.
And to 2.1% in 2027.
Let's take a look at the ES right quick. While Jay Powell talking. All right, we looking at the ES right quick on the futures market. Let's see what's going on. Okay. Let's look at the NQ. We see this happening right now in real time, y'all.
And to continue reducing the size.
We see this happening in real time.
Changes to government policies continue to evolve, and their effects on the economy remain uncertain.
We see this happening in real time.
Higher tariffs.
We're gonna talk about it.
In some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable basis is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk.
Make sure y'all come in, like, subscribe, chill.
Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside
so
risks
the
to
Fed has a
employment
dual
having
mandate,
increased,
so it has to
the
do
balance
two
of risks
things:
has shifted.
price stability and keep inflation down. That's the
Judged it
dual
appropriate at this
mandate.
meeting to take another step
Give me a
toward
thumbs up if you
more
understand
neutral
that.
policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds
What's good, Edmund?
based on what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy is not on a preset course. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices.
There you go. Employment, stable pricing.
Supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Y'all know he about to ask these questions. Let's go. Let's look at what the market is doing in real time while he talking.
As you know, Fed Governor Stephen Byron has kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, how can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
Okay, and then just as a quick follow-up, I'm sorry, can you and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with
so if you don't know, we got a quarter percent rate cut today.
Tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation?
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of
75 basis points for 2025. You feel like that, Larry?
And that there may be effects on employment.
Let's see, y'all.
That I would say, if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply, and to the point where we see what I've called a curious balance. It's, you know, typically when we say things are in balance, that sounds good, but in this case, the balance is because both supply and demand have come down quite sharply.
So we got gold kind of stable.
Sharply because we now see the unemployment rate edging up.
Not too bad.
Chair Powell, do economic conditions and the balance of risks
NVIDIA got a big dump to 169.
So I don't
you see that?
Say that. What we can say is this, that over the course of this year, we've kept our policy at a restrictive level, and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over the course of this year because the labor market was in very solid condition with strong job creation and all those things. I think if you go back to
Real
April and now look
Beezy,
at
what's
the
good,
revised
family?
job creation numbers for May, June, July, and August, it can I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. Maybe they're not quite out of equality. We don't need to know that, but we do know that they've moved meaningfully toward greater equality, the risks between the two goals, and that suggests that we should be moving in the direction.
This rate cut
is
well.
Under what circumstances would a larger than
You don't want. I'm gonna tell you why the 50% would have been crazy, because that would have made the market scared.
At your meeting this week,
there wasn't widespread support at all for a 50 basis point cut today. You know, I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now.
NVIDIA is down because China has said, they banned anybody from buying NVIDIA chips.
See how tariffs
that's why NVIDIA is down right now.
Involved. I think we're now reacting to the much lower level of job creation and other evidence.
It could go to 164.
And saying, well, those risks are maybe
NVIDIA can go to 164. Be mindful of that. NVIDIA could go to 164. That's that liquidity zone again. So it bounced off that last time. It can go to 164 for sure.
The possibility that the labor market is at risk of weakening, or is it the committee's view that the dynamics of the downturn are already in place? I guess I'm just trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago, with the fact that the forecast for unemployment didn't change.
Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market.
He called this a risk management cut.
We were looking at 150,000 jobs a month at the time of the last meeting, and now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off, and that tells you that it's time to take that into account in our in our policy.
The SEP, once again, the median participant has inflation
says the labor market is cooling off
by the end of next year, and the Fed not getting back to the 2% target until 2028. So I guess I'm just wondering how you characterize the risk to price pressures of kicking off a series of cuts at this point.
Yeah, so I would look at it this way. We fully understand and appreciate that we need to remain fully committed to restoring 2% inflation on a sustained basis, and we will do that.
And so just in case you don't know, if he's saying the labor market is cooling off, that's simply saying that job gains are moderate, and unemployment is not spiking, but it is showing a softening demand. You feel what I'm saying? And wage growth is less upward pressure. So we got to just keep that in our mind.
And so I would just say that the risks there have been less than one might think. And in terms of the labor market, what we're seeing is unemployment is still low. It's still a relatively low rate, but we're seeing downside risks.
Michael McKee from Bloomberg Radio and Television. I'm a little confused by your explanation of the Fed cutting rates because of unemployment. If you think
that's a good question right there.
The employment area.
That's a good question right there.
Which your rate cuts wouldn't address. How do you see?
I wrote you on the gram with no response. Man, there's 50,000 people that write me on the gram.
Almost a full percentage point above your target.
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing in it due to immigration. You clearly have a slowing in demand, which is now perhaps more than that in supply, and we know that because the unemployment rate has ticked up. So, that's what I meant by that.
I think a follow-up. Every year since 2015, the SEP has forecast that you would hit your target 2 years later, and this year this SEP says you're going to hit your target 2 years later.
So if China is not getting it from NVIDIA, who are they getting it from?
They're
saying they're going to create their own.
Target is not really achievable. And does this present any credibility problems? For
Paul Briggs was good, family.
Telling people that that's what you're going to do.
Well, I mean, you're right. It does say we're going to get to 2% inflation in 2028 at the end of 28. But that's literally how you put the projections together. You're writing down a rate path, which is designed to create over the course of the SEP, time frame.
Does it
and maximum employment too? So that's
AMD. Let's look at it right quick.
No one really knows where the economy will be in 3 years, but the nature of the exercise is to write down policy that you believe would return to the 2% goal over the.
Looking at AMD on a daily, right? Is underneath the 20 SMA. Look at it on a 1 hour.
This inflation report shows that prices are still going up across key categories for many households, including groceries. What will the Fed do if prices pick up more?
Our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that the effect, basically because of the
let's see, Palantir,
tariffs, but that those will turn out to be a one-time price increase as opposed to creating an inflationary process. That's been our forecast.
163.
All the individual forecasts say that. We think just right? We have to.
Damn, Palantir. That's what you did today?
That is what happens, and we will do that job. Right now, the situation we're in is that we see inflation. We continue to expect it to move up, maybe not as high as we would have expected to move up a few months ago. The pass-through of the tariffs into inflation has been slower and smaller. The labor market has softened. So the case for there being a persistent inflation outbreak is less. And so that's why we think it's time for us really to acknowledge that the risks to the other mandate have grown and that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have two mandates and we try to balance them. For a long time, our framework says that when our two goals are in tension, and this is quite an unusual situation, how do we decide what to do? Because our tools can't do two things at once. What we do is we ask which
should have probably been
how
cut,
far
bro.
is each from the goal and how long is it expected to
playing that game with Donald Trump, you should have been cut, bro.
We think about those.
I know why you ain't cut, because you was trying to tell him screw himself. But hey, bro,
policy had been really
you supposed to been cut them rates, dog.
For a long time, really. Now
you know what this data been said, bro.
Downside risk clearly in the labor market, and so we're moving in the direction of more neutral policy.
How concerned are you about the slowdown in the job market?
Only one rate cut in 2026. Why y'all think so far out? We not even there yet. We barely getting through this rate
market, and obviously we think it's appropriate that we reduce our rates so that we become more neutral, which.
How y'all know what's gonna happen in 2026? Come on, man, stop.
You see. People who are sort of more at the margins, so kids coming out of college and younger people, minorities are having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff. Come
on, J. Powell, I ain't gonna lie, bro. You supposed to cut them rates last time, bro.
Low hiring environment.
Watch Donald Trump say something about you.
If you start to see layoffs, the people who are laid off there won't be a lot of hiring going on, so that could very quickly flow into higher unemployment. In a healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So
you supposed to cut last time, J. Powell. I'm gonna keep it real, dog.
And it's one of the reasons why we think it's appropriate that we begin to shift our.
That is breaking news from CNBC, man.
To a more balanced one.
They don't know. Remember last year they said we were gonna get 7 rate cuts. You know how many we got last year? 3.
Steve Leisman, CNBC.
They said we was gonna get 3 this year. Guess how many we got so far?
In the
1.
past, during rate cuts, you used the word
don't let their breaking news get you.
And I wonder if you pointedly did not use it this time.
Oh, Steve Leisman.
In fact, when you said policy is not on a preset course, did you mean that as sort of the opposite of recalibration? Are we?
Don't worry about what CNBC, man. They say anything to you. They told you 8 rate cuts last year, and what we got? 2.
Thank you.
So I think we are.
They said
in a meeting.
3. They started this year with 3. We got 1 so far.
You know what? Let me say a word about the SEP.
They don't know.
Here. So we often point this out. What the SEP is it's an accumulation of the
breaking
individual
news.
projections of
Fed forecast only one
showing
rate
what
cut.
they believe at a particular moment.
They don't know. He might not even be there for
most likely path for the
2026.
economy
Nobody
and
don't know
thus
what's
the
happening through
appropriate path for
2026. We got to
monetary
get this one out the way. We don't know what we're going to do here.
We don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them.
Stop.
And so we always say we're not on a preset.
You don't know what's going to happen here.
Mean that.
Oh, 2026.
The actual decisions we make are going to be based on the incoming data, the evolving outlook, and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in a good number of cases, no more. So rather than looking at this as certainty, I would encourage people, as always.
And CNBC said 3 cuts. You had 10 people said 2 or more. You had
there are different
9 people said no more
likelihoods. Rather
CNBC
than
don't know.
This one is certain and this one isn't happening. So that's what I would say.
Thank you for getting to my follow-up question, which was: is the dispersion in the outlook a sign of uncertainty of policy in the meetings to come? Thank you.
You know, it is such an unusual situation.
I ain't gonna lie, J. Powell. You not convinced, bro. You sending the market wrong.
Is weak, inflation is low, and when the labor market is really strong,
I could be wrong, but I recall you supported not cutting rates.
Where we have two-sided risk.
I don't think we should cut rates,
and that means there's no risk-free path.
I don't think we should cut rates.
So it's quite a difficult
based on the data
situation for policymakers, and it's not at all surprising to me that you have a range
NVIDIA is tanking blood everywhere. The stock up 35% on the year. How's it tanking?
The path of the economy, but it's partly that. But it's also partly about what's the right thing to do in light of this, of the tension between the two goals. How do you weight them? How worried are you about one versus the other? And so it's natural. I think it would actually be surprising if you didn't have a pretty wide range of views based, in this kind of highly unusual situation, and we do. So, but we get together, we discuss, we have a great discussion, and then we decide what to do and we act. But you're right that it's a wide dispersion of views, and I think that's understandable and natural in the current situation.
Hi, Victoria Guida with Politico. You've talked a lot about Fed independence and the importance of it over the years, but as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching to determine that the Fed is still making decisions based on, the economic outlook rather than political considerations?
Look, it's deeply in our culture to do our work based on the incoming data and never consider anything else. That's just everybody who's at the Fed really feels strongly about that way. So, you'll know it by the way we talk about what we're doing, by the speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them in terms of political outcomes. I think when you get to another part of Washington, everything is seen through the lens of, does it help or hurt this political party, this politician? That's the framework. And I think people find it hard to believe that is not at all the way we think about things at the Fed. We're taking a longer perspective. We're trying to, serve the American people as best we can. So I think
if you got enough time,
you would be able to tell. I don't believe we'll ever get to that place.
Why are you asking about stock losses in the chat? You can simply do a Google. Every Bitcoin is going down.
They're making their arguments, and we're having a great discussion around these challenging issues. So,
do you see the court case around Lisa Cook as being related to questions of Fed independence?
I see it as a court case that it would be inappropriate for me to comment on.
There you go.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So we saw the preliminary benchmark revisions down 9.
Don't fall for the trap.
The revisions for June were the first negative revisions we've seen since December of 2020. How can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
So on the QCEW, the revision that we saw was almost exactly what we expected. It was amazing how close the expectation was. So, and the reason for that is, for the last,
I'm wondering if I should take my NVIDIA.
There's been
if I should take my Tesla
overcount.
In my ASML profits, man.
Bureau of Labor Statistics really does understand this, and they're working hard to fix it. It's got to do.
I'm wondering if I should take them profits, man.
Low response rates, but it's also got to do with what's
and use that
because
for some old situations
around new companies and how many go out of business, how many are founded.
Man, this cut deserves.
You can't survey.
Did nothing for the 10-year. No lower mortgage rates just yet.
To do, especially when the
Trap, what do you think of this going to do with crypto?
So
I don't know.
They've been
should have sold Nvidia last night to rebuy today. Why?
The data we get is still good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really.
I see Netflix doing, y'all. Netflix jumping
now, both in and out of the government, and it's no great secret. We want higher response rates, and we need those to have, less volatile data. And the way to get that is to make sure that the agencies that collect the data have sufficient resources to drive higher response rates.
Netflix been playing in our face though.
That's what it takes. It's not a mystery. That's what it takes.
Netflix, we need you to jump back above that 12. 77, bro. You keep playing in our face.
First month or lower for the first month. By the time you get to the second or third month, you're still collecting responses for that last month, for that prior month, and you get to the place where the data are much more
This won't even tickle the effect more.
It's just that we get a little.
I finally caught you live. What's good, family?
Well, for the benchmarks, if that holds, it's 51% of the jobs.
Let's go, Netflix. We need you to.
Shows a weaker job market coming into this year. If you had that information, would it have changed your mind related to where the interest rates should be? Should there have been a cut earlier?
We have to live life looking through the windshield rather than that rearview mirror, as you know. All I can tell you is we see where we are now, and we take appropriate action.
Jay Powell said, "Hey, we gotta look through the windshield, not the rearview mirror. Stop trying to play with me."
Thanks. Howard Schneider with Reuters. So, as you mentioned a minute ago, some margins of the job market.
We need Netflix to take this out.
Already happening. Black unemployment rate in August was above 7%. Declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a quarter percentage point now is going to arrest that?
Well, I hadn't say that I thought a quarter point would make a huge difference to the economy, but you've got to look at the whole path of rates.
We need Netflix to take this out.
Markets has already been baking in expectations.
You got to take out that 1253.
Expectations, right? So I think our policy path really does matter, and I think it's important that we use our tools to support the labor market when we do see signs like that. I did mention that you see minority unemployment going up. You see younger people who are more vulnerable.
Minority unemployment going up.
Economic cycles. That's one of the reasons, in addition to just overall lower payroll job creation, that shows you that at the margin the labor market is weakening. I would also point to labor force participation. Some part of the significant decline in labor force participation over the last year has probably been cyclical in nature rather than just the usual aging process. So we put all those together, and we see that the labor market is softening, and we don't need it to soften anymore, don't want it to. So we use our tools, and it starts with a 25 basis point rate cut, but the market's also pricing in a rate path. I'm not blessing what the market's doing at all. I'm just saying it's not just one action.
As a follow-up to that, the growth mix right now seems very concentrated in investment and on the consumer spending side in the higher income groups. Do you feel that that's an unsustainable mix for the economy moving forward?
I wouldn't say that. I mean, you're right. Those are two. We're getting unusually large amounts of economic activity.
I'm in that.
AI build out and corporate investment.
Trump does put.
No one does. In terms of spending, you saw that the consumer spending numbers were well above expectations, and that may well be skewed toward higher earning consumers. There's a lot of anecdotal evidence to suggest that. Nonetheless, it's spending. So, I mean, I think the economy is moving along. Economic growth is going to be 1.5% or better this year, maybe a little better. Forecasts have been coming up, as you can see. So, labor market unemployment is low, but downside risks.
September got my portfolio lower than my self-esteem. Why is that? September been on a run.
Hi, Stephanie Rule, MSNBC. Treasury Secretary Scott Bessent has said that the Federal Reserve suffers from mission creep and institutional bloat. He's now calling for an independent review. Would you support an independent review, or are you open to any sort of reform in any areas of the Fed?
Hey, y'all, let's get the likes up, y'all. Let's get the likes up, y'all. We got 1,100 people on the live. Can we get the likes up, y'all?
Officer says.
Whoop de doo. Come on, man, get the likes up.
So in terms of reform at the Fed,
we got 320 likes, y'all.
Whoop de doo.
Come on, man.
A lengthy and I think very successful
Help us
process
out.
of updating the policy framework. I would say there's a lot of work going on behind the scenes around the assets we have in the Federal Reserve Federal Reserve System and at the board. Are they the right size? We're actually going through a 10% 10% headcount reduction through the whole Fed, including the board and all the reserve banks. The employment at the Fed at the end of that will be.
Come on, y'all. Let's get the likes up, baby. Let's get the likes up, baby.
So we will have had zero.
Oh, it looked like the market kind of turned around. Power hour.
With that, and I think we'll probably do more.
Power hour.
I think we're certainly open.
Come on, let's see what we got here, y'all. Let's look at the SPY.
Ways to do our jobs better.
But not an independent review.
We're certainly open to to always trying to do better.
Mr. Chairman, Neil Irwin with Axios. There's been some debate lately on whether AI is already starting to affect the labor market in terms of lower labor demand.
Higher productivity, by contrast. Do you buy that? And if that is true, does that have implications for the monetary policy setting?
So there's great uncertainty. My view.
Look how low that thing got. Look how low that thing got.
Some effects, but it's not the main.
Remember I told y'all last night, knee-jerk reaction. That thing got low. Almost to, look how low it got. Almost to what? That 553, which is also what? A zone. Come on, man. That's why we mark them zones out. Look at that, how I marked that out for us. Look how I had marked that out for us. Come on. Look how I had marked that out for us. Come on. Come on, man. Let's see what the NASDAQ doing, y'all.
And last year, goods inflation was negative. If you go back 20
Look at the NASDAQ turn around. Look at the NASDAQ turn around. Lord, look at that drop. Look at that drop.
We essentially returned to zero or slightly negative inflation. Now, I think goods inflation over
I want you to be mindful of this, y'all.
0.2%, which doesn't sound like a lot, but it's a big change. So we think, I mean, analysts have different views, but we think it's contributing.
Oh, look at the NASDAQ turn around. Look at the NASDAQ turn around. Let's go. Let's go. Shazam X, what's up, family? ASML back, bro. What's up, family? Tesla acting up? Is it? Ooh, look at Tessie. Look at Tessie. Look at Tessie. Let's go. Okay. Market turning around. We watching it in real time. Tell me how y'all feel about watching this in real time. Tell me how y'all feel about watching this in real time, fam. Come on, come on, come on. Let's get a like. Come on, we got the green in the back. Why we got the green in the back, Trap? It's money time. It's money time. Let's go. Put the goddamn glasses on, Trap. Put the goddamn glasses on, Trap. All right, go back to Jerome, Trap. You're tripping.
Might consider leaving the Fed in.
Come on.
I have nothing new on that for you today.
Hi,
Hi, Katerina Saraiva with Bloomberg News. I just wanted to follow up on one of your answers just a couple minutes ago.
Ooh, look at
we've often heard you talk about how you.
Come on, come on.
Whoop de doo.
Come on, fight, fight. Shout out to, watch this, y'all. I want y'all to tag him and let him know in real time I said this. Shout out to my guy, Chris Sane, man. I seen that man call Lyft at $15. Shout out to Chris Sane. It was last week. I saw him call Lyft at $15. I got to get that man his props. Tell him Trap said it. Tell him Trap gave him his props for sure. See, I don't got no hate in my blood. When somebody calls something, I look at it. I be watching. Oh, look at Meta. Look at Meta. Come on. Hey, if you're new to the channel, man, listen. If you're new to the channel, I want y'all to do something for me. If you're new to the channel, man, I want you to like and subscribe, y'all. We're going to be doing more of these. We're going to be doing more of these live in real time. Right? We're going to be doing more of these live in real time.
That's how it's going to work.
You know what I'm saying? So, yeah.
I think
check
that
out.
That is the way the institution that's in the.
I got Lyft 2 weeks ago. Go Chris Sane. Shout out to Chris Sane. Somebody let Chris Sane know. Trap gave him his props. I seen him call Lyft, and it was $15. I didn't see what he saw based on fundamentals and how I look at that company, but I gotta get that man his props. There's no hate in Trap's blood, man. There's no hate in Trap's blood, man. I want to see everybody win, man, because I know that it take a lot to make money in this game.
We're not going to get distracted.
You know what I'm saying? We all take wins, we all take losses. So anytime I see somebody make a call, I'm like, oh, that's an interesting call. You know what I'm saying? So I got to get that man his prison.
Claire Jones, Financial Times. Given the
man, look at that market turnaround. Look at, come on, Facebook.
A lot less descent today.
Boy, Nvidia, if you could get up off your ass, I promise you, if you get up off your ass.
The drivers were of coming to that very strong consensus.
Let's go, Tessie. 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 Let's go, Tessie.
Rates to end up higher by the end of the year to 5 cuts. I mean,
Chris Sane is my sensei, man. Listen, I love it, man.
On one side, why there was so much support for a cut today.
They say you hate on EYL though, bro. You can't never recall me. I ain't even worrying about what they say. Shit, they said Jesus wasn't who he was, yeah. So you can't listen to what they say. You know what I'm saying? They say Malcolm X wasn't who he was. They say Christ, Martin Luther King, who he was. Who is they? What you say? You heard what Christ told Peter? Who do you say that I am?
150,000 jobs per month.
Who do you? Don't tell me what they say.
Things. I think that the new data that we've had, and it's not just payrolls, it's other things as well, suggests that there really is meaningful downside risk. I said there was downside risk then. But I think that downside risk is now a reality, and there's clearly more downside risk. So I think that's broadly accepted, and so that meant different things for different people. Some wrote down, almost everyone wrote down, supported this cut, and some supported more cuts, and some didn't, as you will see from the dot plot. So that's just the way it is. I mean, people have, you have people who take this work very seriously, think about it all the time, do their work, discuss it with our colleagues, between ourselves, and then we have a meeting where we put it all out on the table, and this is what you get. And you're right, there's a range of views in the dots. Like I said, very unsurprising given the quite unusual nature of the challenges that we face. But let's remember, though, the unemployment rate's 4.3%. The economy's growing at 1.5%.
Look at that, man. Heard that economy is growing at 1.5%, y'all.
From a policy standpoint, the standpoint of what we're trying to accomplish, it's challenging to know what to do. There are, as I mentioned earlier, there are no risk-free paths now. It's not
Power Hour. Davion, what's good, family? My Patreon people jumping in.
Those are our two equal goals, and you will see that there are a range of views on what to do. Nonetheless, we came together today at the meeting and acted.
What am I thinking about the rate cut? You know, I have two ways to look at it, fam.
You mentioned earlier that job creation was running below your guess at its break-even rate. I'd be curious to hear a bit more about that and where you think the break-even rate is.
So there are many different ways to calculate it, and none of them is perfect. But it's you could say it's somewhere between 0 and 50,000, and you'd be right or wrong. I mean, there's just many different ways to do it. So wherever it was, 150,000.
Some action. Netflix is giving us some action. Let's get on our 1 hour chart. What we need to see. Watch this, y'all. Let's look at this. I'm gonna give you an idea.
People are joining the labor force. The labor force really not growing much at this point, and that's a lot of where the supply of labor was coming from over the last 2 or 3 years. So we're not getting that now. We've got much lower demand. It's interesting that supply and demand have really come down together so far, except now we do have unemployment ticking up outside just one tick.
Why is it acting like this?
The range where it's been for a year. 4.3% is still a low level. But,
you want to see it take out this right here, y'all.
This speedy decline in both supply and demand is certainly.
You want to see it get above at least that's the halfway mark, right? That halfway mark will put us at about 1234, but I want to see it get back on top of one right here. I want to see it get back on top of that 1251. Netflix get back on top of 1251. We know the buyers up all the way in. Let's get the likes up, y'all. Let's get the likes up to 1,000 likes, man.
I don't know that you see a big tension here, but it's gratifying to see that economic activity is holding in, and it's good. So it's a good bit from consumption. It looks like consumption.
Aristotle leaves trap how to analyze charts and financials and saying on the day trading scalping. Captain him touch. Well, it's not really reversing. It's back to where it touched that a little earlier. I want to see it get back on top of 1234. That means to take those sellers out the halfway mark, but 1251 to really get us where we want to go.
SEPs, so and really the inflation and labor market didn't change much. It's really the risks that we're seeing to the labor market that.
Let's see what Jerome talking about.
Decision.
Nicole. Hi, Nicole Goodkind with Barron's. Thank you for taking my question. Given the cumulative impact of high interest rates on the housing sector, I'm wondering how concerned you are that current rate levels are exacerbating housing affordability issues and potentially hindering household formation and wealth accumulation for a segment of the population?
Housing is an interest-sensitive activity, so it's at the very center of monetary policy. When the pandemic hit and we cut rates to 0, the housing companies were incredibly grateful, and it was really, they said that was the only thing that kept them going, was that we cut so aggressively and provided credit and things like that, and they were able to finance because we did that. The other side of that is when inflation gets high and we raise rates, and you're right, it does burden the housing industry, and so rates have come down a bit, and as that happens, we don't set mortgage rates, but our policy rate changes do tend to affect mortgage rates, and that has been happening, and that'll of course raise demand. Lower borrowing rates for builders will help builders will help supply, and so some of that should happen. I think most analysts think that
if you're looking at Tesla right now, that's what you're looking at. 425. Is in that area. Same time, you got the equal highs right here. If you come in a little bit more, I'm on the outlet. You got that equal high right there at 424. So I'll give it that whole range between 424 and 425. But you definitely right about that, family. But remember, you also got this. that you got to be mindful for.
Areas around metropolitan areas like Washington, for example, are very built up, and so you're having to build farther and farther out. So that's where it is.
And just a quick follow-up. During the last SEP or the press
You're going to be
conference,
mindful of that right there.
you seem to indicate that policymakers
Be mindful of that right there, you hear me?
Their projections, and I'm wondering if you still feel that way.
You know, forecasts.
So just be mindful of that on your Tesla. So if you're in your Tesla play, right now it's at 423. You won't see it rip past 425, 69, but you do have that equal high at right at 424. You do got that equal high right at whatever that is, 424.75. So you got to watch it right there. Watch it right there. You see it get on top of 425, you like that. But it can come down to about 402, 400. All right, so just be mindful on your Tesla with that.
We're cutting the size of our balance sheet quite marginally.
Be mindful on your Tesla with that. But also watch this.
Abundant reserves condition, and we've said that we would stop.
Because even if it don't come down all the way, you still got this area right here.
Somewhere above an ample reserves level. That's
You got that area right there, so that's a good area to watch too. But also, I want you to look at something, mind you. You don't have to come all the way from the bottom of that swing low. You could come from the top of this move right here and watch what this do you.
The level of runoff is not very large, so I wouldn't attribute that.
Look how amazing that is. That 50% mark go right in that gap. Woo! Look at that fib work right there, y'all. Look at that fib work right there, huh? Look at that fib work right there, huh? Look at that fib work right there.
So we always think of it as the dual mandate, maximum employment and price stability for a long time.
You just be mindful of that.
Long-term interest rates are something that will result.
Stable inflation, low and stable inflation, and maximum employment. So we haven't thought about that for a very long time as a third mandate that requires independent action. So that's where that is. And there's no thought of, as far as I'm concerned, there's no thought of considering that, considering that we somehow incorporate that in as something in a different way.
Thanks, Chair Powell. Matt Egan from CNN. We recently learned that average FICO credit scores are down this year by 2 points, the most since 2009 during the Great Recession, and delinquencies are high for car loans, personal loans, credit cards. How concerned, if at all, are you about the health of consumer finances, and do you expect today's cut will help?
So, we're aware of that. I think default rates have been kind of ticking up, and we do watch that. They're not at a level, I don't believe they're at a level where overall they're terribly concerning, but it is something that we watch. Lower rates should support economic activity. I don't know that one rate cut will have, a visible effect on that, but over time, a strong economy with a strong labor market is what we're aiming for, and stable prices, so that should help.
Just to follow up, this rate cut is coming at a time when the stock market is at or near all-time highs, and some valuation metrics are elevated historically. Is there a risk that cutting rates could overheat financial markets, potentially fueling a bubble?
We're tightly focused on our goals, right? And our goals are maximum employment and price stability. So we take the actions that we take with an eye on those goals. Separately, and that's why we did what we did today. Separately, we monitor financial stability very, very carefully, and I would say it's a mixed picture. But households are in good shape, banks are in good shape. Overall, households are still in good shape in the aggregate, and I know that people at the lower end of the income spectrum are under pressure, obviously. But from a financial stability perspective, we monitor that picture. we don't have a view that there's a right or wrong level of asset prices for any particular financial asset, but we monitor the whole picture, really looking for structural vulnerabilities. And I would say those are not elevated right now.
Jean, we'll go to you for the last question.
Hi, Chair Powell. Jean Young with M&I Market News. I wanted to ask about inflation expectations. You've said the Fed can't take the stability of inflation expectations for granted. You mentioned at the short run they've gone up a little bit. I wonder if you can talk a bit about that. And then also at the long run, I'm wondering, do you see evidence that the debate over Fed independence and the growing deficit is putting pressure on inflation expectations?
So as you said, shorter-term inflation expectations have tended to respond to near-term inflation. So if inflation goes up, inflation expectations will predict that it takes just a little while to get back down. Fortunately, throughout this period, longer-term inflation expectations, both break even in the markets and almost all of the longer-term surveys, Michigan being a bit of an outlier lately, have been just rock solid in terms of running at levels that are consistent with 2% inflation over time. So we don't take that for granted. We actually assume that our actions have a real effect on that, and that we need to continually show.
Mic check. There we go. My bad. I clicked it by mistake.
2% inflation, and so you'll hear us doing that. We're, as I mentioned.
Mic check. We hear me. I'm good.
We have risks that are both affecting the labor market and inflation. Those are our two goals, and so we have to balance those two. When they're both at risk, we have to balance them, and that's really what we're trying to do. Your latter part of your question was about independence. I don't see.
Can y'all hear me? Can y'all hear?
Participants.
Mic check.
I don't see that that's something they're factoring in right now in terms of setting interest rates. Thanks very much.
Y'all want to watch the market with me, or y'all want to end it? We can end it. Let me know what y'all want to do. I'm with y'all. Right? I'm with y'all. Whatever y'all want to do, I'm with it. Let's. I got something.
Conference. There's no predetermined path for interest rates. I thought Steve Leisman asked an interesting question about the word recalibration.
I want to see if they're going.
Frankly, he didn't say recalibration, but I think there was recalibration. And I always talk about the spread between the Fed funds rate and the 2-year Treasury, and it was getting pretty out of whack. It wasn't like it was a year ago when it was the most out of whack.
Ooh, that market done turned around. All right, we'll pause them. Let's go, y'all. It's me and y'all right now. It's me, you in the market right now. Let's get to it, man. You feel me? It's me, you in the market right now, y'all. That's what I want to do right now, man. Here's what I want y'all to do for me, man. I want you all to lay up there right now, and I want you all to share this out, man, because we're going to just go through some charts right quick. How about we do that, y'all? How about we just go through some charts together? Right? How about we just go through some charts together? Netflix, Spotify, Tezzy. All right, let's go through some charts together. Y'all want to do that? I think that'll be good. Y'all got to do me a favor, though. right? I'm gonna give y'all 30 seconds. Let's go through a countdown on the market. Y'all do me a favor right quick, man. Y'all share this out, man. Let's get 1,500 people in here, right? Let's get 1,500 people in here. We got 1,000 people in here, y'all. I'm gonna start going live more often, y'all. How do y'all feel? I feel like we got a lot going on right here. I think we got some good stuff going on right now, and I feel like we can watch the market together. I feel like we can get into some charts together, right? To just see what's going on at the end of the day. And we can do this as a squad. Your boy is up right now, 13 grand going into the, I don't know if y'all can see it. Right here. Your boy is up 13 grand right now. There we go. Right, 13 grand right now. That's good. We was down. I'm gonna tell you what's crazy. I was down 100,000 while Jerome Powell was talking. Right, I was down 100,000 while Jerome Powell was talking. I don't know if y'all can see it. All right, that way y'all know I ain't lying to y'all. There you go. Your boy was down 100,000 while Jerome Powell was talking. I'm up 15 grand now. Right? There's all option plays. And I ain't trying to stunt, rep, or nothing like that. We just want to talk about it. So let's get into it. Right? Let's get into it. And let's talk about something. Let's look at some charts, man. What y'all want to look at? I'm with y'all. Going live more often. Yep, on the personal page. Let's talk about it, y'all. What y'all want to talk about? I want to talk about what y'all talking about. What y'all want to see. What y'all want to look at. Visa. Let's go look at Visa. My man said Visa. We in the Visa play right now, too. We in the Visa play. So let's go look at Visa. Let's look at Visa as a squad. Let's look at Visa. All right, that was the first one on it. Boom. Let's look at Visa. Okay, we got some movement right here on Visa. All right, so here's what we know. Just looking at it right there. What do we see? First thing we're gonna do. All right, you see this. This is a bullish candle right here. The reason why, because it mean it rejected them bears right there. It rejected that sell down there. So because it rejected, let me move this out of the way. I can do this a different way. All right. Let's bring our, so we can have our. All right. So because of this right here. All right. So because of this long wick right here, we know for a fact that it rejected the bears right here. So that's a good thing to see right there. We like this because this is now I will say this based on this, looking at this chart right here. So watch this. We're going to open it up a little more. And it's just based on my synopsis, right? So what I will say is we on top of this 20-day. That's good. We like that. We love to see that every time, right? Let me move my screen over a little bit. All right, so because we on top of that, we love that. We love being on top of that. Also, one of the things that'll be a key component, so we come from this low right here. So let's just mark that out right quick. And we don't got to go all the way to the biggest swing high. We can just go to where we came from, right? We can go from here to where we came from currently, right? Which is a matter of fact, let's look at the daily so we can get a better idea of what we got going on. Ah, this is better. So the first thing we're going to do is let's look at the monthly. So now watch this. For the monthly, we down. On the monthly, we down. So this is, watch this. So this is why I do stuff like this so we can help us out. Right, so we in that zone right there based on that, right? So this tells us where we at right now on a monthly. You know what I'm saying? So we ain't broke out of nothing. We still inside of that same range, nothing too crazy. So now we go to the weekly, we can get a better idea. So now we're, boom, look how that's still sitting there. Y'all see how that aligned right quick? Did that make sense? How that aligned, how I just got on, put that box in immediately. What happens is the more you start doing stuff, your eye gonna start getting attached to certain stuff. You're gonna start seeing stuff. You're gonna start identifying something. So now what happens is we see right now that Visa is just boxing in the same range. So it ain't nothing for us to get too excited about unless it can then come higher. So what would I need to see Visa at? And it's just looking at the weekly. All right, so now let's get into the daily. Look at that. And if you in a Patreon, this makes so much sense to you because we've been in a Visa play, and this pretty much how it's been looking for us. This pretty much how it's been looking for us. All right. Now, here's what I do want to say. So here's what we know. The first thing we know is our So we know our all-time high is at about 375, right? So we can do that. We see that. So let's now take this. I don't got to use it no more because we now inside the daily. So here we go. Let's look inside of here. So now look on the daily chart. We see it's right on top of our 20-day SMA. So that's kind of cool. We like that, but we also know where we came from, which is this high. We came to that low. Now what we can do is say, what do we think we're going to go next? So based on this, if I'm looking at it, this was just telling me. So we got a candle over candle right here. My next move for Visa is I would want to see it definitely get on top of this right here. Not that. You can go here. I definitely would love to see it get on top of 353. That'd be a good play for us. But honestly, watch this. If you're really paying attention to it, so you got the all-time high here, right? And then you create a low here, right? But here's the gravy part. See this, man, I love this shit, dog. I'm starting to love this shit more and more every day. So now what we know is, now watch this. Here's the dope part about this. If we know coming off that high, right? If we know coming off this all-time high, you know you're gonna get a rejection, right? Then you create a lower high, a higher low right here, a lower high right here. So then you come in here, this is where you need Visa to get on top of. It's not to Visa jump back on top of that you see some action on it. You feel what I'm saying? I think that's a thing for me. So once you get it on top of here, you can say, okay, we got some momentum, right? Coming on top of here would definitely give us some momentum. And you see what that create. Watch this. If we took this same thing and stretched it out. Damn it. I'm going to do it like this. Right, so we took that and stretched it out, and I'm gonna give you a little more so you can see it. All right, now what that does for us is tell us that, hey, ooh, do y'all see what I see? Oh my God. I'm not muted. Y'all can't hear me? I'm live. Y'all can't hear me? Let me know in the chat if you can hear me, man. Okay, we can hear you again. I don't know what happened. I don't know why it got off right quick. Okay, so we can hear. All right, so basically what I was saying was, so hopping on top of this right here is going to be essential for us if you're looking at Visa. So hopping on top of that, that 350, 341 is going to be essential for us because then you take out these sellers right here. You take them out, right? Which is good, right? But then your ultimate goal is, you know that the market has to do what? It's trying to go here instead of this box, which is a smaller little pool, right? And from there, you can say your next place is going to be right here. For me, it would be taking out this high, this lower high right here. You want to take that out. So for me, from 553 is one, my next place is 559. I won't get on top of that. So that's the two spots I'm looking for if I'm looking at Visa. I'm looking at 553 and I'm looking at 559. But then at 559, I'm going to look at this right here, the bottom of this box, which is 562. I'm looking at that as 100% a inflection point, right? Because that 5, watch this, that 362, that 362 is going to be essential for you. And the reason why is because, remember, that got rejected, right? So that shows us that got rejected. So from here, if you was to play Visa, I wouldn't like it until it got on top of 353. Once it got on top of 353, I would play for 561. And then from 561, I'm playing for it to go back down, right? I want to see what it do. I want to see what the reaction going to be at 561. Now, if I was to do this, back at all-time high. If I was to bring it back to all-time high, then that's so good. So honestly, getting on top of, I would want to see it get right back on top of 551 if I just came from where it was at. So again, kind of that same area. I would want to see it get on top of that 353. I want to see it get on top of that 353. So if I'm looking at Visa, I want to see it take those sellers out, get back on top of 553. From 553 out, you can make a play from 553 to 560, which will put you right up under that line. After 560, because why do you say at 560? Well, because 562 puts you right at the bottom of that box. We can almost see a rejection coming at that, right? So we know it's going to reject right there. And if it rejects right there, why? Because you have what's called a support shelf. Because that's where it got rejected at and it fell down, right? So you could play it to reject right there. You can play it, say, okay, if it reject that, if it rejects that, then you know for a fact, all right, it's going to come back down. You want to see what it's going to sit on. It'll probably reject that and come sit right back on top of 353. You know what I'm saying? So, yep. But if it goes past that, then you know it's going to use that box, that liquidity pool for what? Fuel to go up back to all-time highs. So if you see it gets on top of 560, if it gets on top of 363, if it gets inside of this liquidity pool at 363, 364, 365, you know it's going back to all-time high. But once it jump on top of 363, then you know 375 would then be what? Your next what? Resistance. Yes, Cassandra, 3. I don't know why 5 is sitting in my head. I apologize. I don't know why 5 is sitting in my head. I don't know where I keep getting 5 from. I don't know why am I thinking about 5. I apologize. Flush you, Trap. But yeah, so we get on top of 3. If we get on top of 3, if we get on top of 353, that's what I will be looking for Visa right now. Me personally, because now watch this. This 345 is such a pivotal point for you with Visa. The reason why the 345 is such an inflection point, 345.83, the reason why that's such an inflection point is because it's sitting right on top, right underneath your 20-day SMA. Now remember, we like to see plays when they hop on top of the, what? SMA. Anything below that tells us that the bears are in control, right? Bears are in control. Now, I'll be honest with you. When the bears are in control, you want to just be mindful. Now, what happens is a lot of people, what they like to do, what a lot of people like to do, get them at the discount, which I'm not mad at. I love it. But that 345.83 is going to be an inflection point because that can be a support shelf, right? And I'm going to show you how it can be a support shelf. Watch this. If we look really close at it, if you look really close at it, you see that touches. You got several touches of that. 345.17, you got several touches of that. Right? You got several touches of that 345.17. Look at all those touches on it. You got one touch here. You got another touch here. You got another touch right here. You got a wick rejection right here. You got another candle touch right here. Then you got 2 candle touches right there. So that's a real interesting point for you right there at 345.17. Does that make sense? Does that make sense to everybody? Right, so that's kind of just what if I'm looking at it, you know what I'm saying? And that's what I'm kind of watching if I'm looking at that like that. You feel me? I would just want to be really, really mindful of what's going on right there in that space. Yeah, I'd be real mindful of what's going on right there. So I would just watch it. I would just watch it. For me personally, I would want to see it get above that. If it got above that, then we talking something different. We're talking something different. Nah, I'm not mad at this. Now, here's what I will say. I am not mad at this last candle. When we talk about candle communication, I'm not mad at that last candle. The reason why, because that's a strong candle. That candle has a very, very, very small wick at the top. So that tells us this is all buying control. If the market closes without that candle, with a small wick like that, if the market closes that out, then that tells us it's a good chance that tomorrow buyers are gonna step in again. Trap, I have a question. Do you have your 20 SMA set at the daily or at the chat or at the chart, meaning the SMA change is dependent? Nope. You have it set, period. And so whether it's on a 4 hour, it's gonna still be there. Whether it's on a 1 hour, it's still gonna be there. Wherever it's at. So I'm on a daily right now. That makes sense. But when you go to the 1 hour, which is what we going at, it's above that. But that also tells us this. Watch this. That also tells us that we have mixed messages on the chart, which means I'm going to step back until all my messages tell me the same thing. Is another reason why I wouldn't trade. Right? So because, watch this, the daily is underneath, is right at it. The 4 hour, it's on top of it. The 1 hour, it's on top of it. So for me, I would need that daily to jump on top of it. Right? So that's when you have confirmation through all three charts that you kill on. You know what I'm saying? So you have on a weekly, it's underneath. On a monthly, it's underneath. So on your higher time frames, it's underneath. When you get lower, it's on top of it. So for me, that's another sign for me to just sit back and chill so I can get all three of them to say the same thing. And that's kind of something I always do. I want mine to say the same thing. That gives me confirmation. Confirmation gives me confidence. Yep, Ram said it, stack confluence. So said confirmation, look for confirmation because confirmation gives me what? Confidence. All right, confirmation gives us confidence. All right. So that's kind of what I be looking at. When I'm looking at stuff, I'm always looking for where can I get confidence? And if I can't get no confidence, I kind of just decide to stay away from it. That makes so much sense. Great example. Yep. You know what I'm saying? It's easy to look at. So you want to make sure everything you're looking at is the same, on the same. You want to make sure everything you're looking at confirming one another. You know what I'm saying? All right. So let's go, man. Let's look at one more, man. Let's look at one more. I'm just rocking out with y'all, man. Y'all get the likes up and let me know, man, if y'all think, like, bro, this is real cool, man. Just coming on a chart, talking to us, live talking to us. Let me know how y'all feel about that, man. Like, I don't mind doing this a little bit more, man. Shout out to everybody in here. Come on, man. Let's get 1,000 likes in here, y'all. Can we get 1,000 likes? 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 Let me know if y'all can give me 1,000 likes, man. If we can get 1,000 likes, bro, we go look at another chart, man. Give me 1,000 likes, y'all. We can go look at another chart, y'all. Let me know. Let me get 1,000 likes, y'all. Get us to 1,000 likes, y'all. We can get another one, man. We can get another one in. We can get another one in, y'all. Let's get 1,000 likes up in there, y'all. That's why I rock with y'all. That's why I rock with y'all. That's why I rock with y'all. All right, let's get another one in. Let's go. Let's go. I'm rocking out. All right. Tell me in the chat which one we want to look at. What 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 we want to look at. All right, come on, let me know. VRT, SoFi. All All right, let me know what we're going to look at. We'll get on it. We'll look at it. We have 1K watching. Should have 1K likes. Shout out to y'all, man. Come on, man.
Whoop-dee-doo.
Come on, man.
Whoop-dee-doo.
1K likes, man. Let's go, man. 1K likes, man. We like it, man. Hey, I'm rocking with y'all. Y'all rocking with me. You know what I'm saying? Let's go, man. All right, so we got some people saying SoFi. Some people saying the SPY. Some people saying UNH, AVGO, NVIDIA. Come on, man. Talk to me. SoFi. All right, let's look at SoFi then. Let's look at SoFi. Y'all looking at SoFi. Y'all want to look at SoFi? We can look at SoFi. All right, let's look at SoFi. All right, let's walk through it. Just walk through the trap away. We'll just walk through the trap away. All right, let's walk through the trap away. All right, move this over a little bit. Just want to make sure we closing right. Man, what happened? I want to make sure we closing right. This market. I love this market, dog. I ain't gonna lie. I love this market, man. All right, so let's go, man. So first thing we're gonna do is we are going to, I might need to come this way. That way I can be looking at the screen at all the time. Yeah, that way I'm always looking at the screen. All right, so the first thing we're gonna do, man, we go look at that monthly. And what do we see on that monthly? We see that strong uptrend on that monthly, so that's good. Coming from $12 to $27, that's insane. From June, July, August, September, so that's good. We got those strong candles showing us that, so that's crazy. So we see that in line. All right, let's get into our weekly. Okay, so now, this is gonna be interesting. So the first thing I'm gonna do is watch this. Book. I'm gonna write on that, so I know what I'm looking at. Previous week high. And I'm gonna write on that. Previous week low. All right, so now I know where I'm at right there. Y'all saw what we did? Y'all saw what we did? Y'all saw what we did first and foremost? All right. You feel me? First things first. All right, next thing we're gonna do is we see our 20-day. So the next thing we can do is come to our daily. All right, so we come to our daily. What we got? We know where. So we put a note in our head that say our previous week high was all the previous days high. All right, so we'll put a note right there. All right, and then we'll come and create this different color. Change the color on that. We'll change that to orange, and then we'll write. All right, well, Trap, why do you write previous day low, previous day high? Well, because what I'm doing right now is I'm boxing myself in, right? And so what I like to do is understand what's going on. So we can see what's going on, right? All right, so we can see what we going on. That's pretty good. So now, okay, also we notice something right within that. Y'all notice I always mark these out. I gotta write them out. It ain't big, but it's there. Y'all see it? It ain't major, but it's there. It ain't major, but it's there. Do y'all see it? Do y'all see it? All right, shout out to Double R for the, come on, dog, Double R. Right? It ain't major, but it's there. Y'all see it? Y'all see it? All right, y'all see that imbalance right there. Y'all see that? All right, right now we are looking at SoFi, right? Don't put no more things in there. We're looking at SoFi right now. 8 minutes to market close, 9 minutes to market close. All right, do we see that? Let me know if y'all see that. Let me know if y'all see that small gap in that. Let me know if y'all see that small gap in that. Yep. Chop fella, I see you, family. All right, let me get a yes in the comments if you see that small. I see it. Okay, cool. I like that. All right, I like that. All right, so here's what I want to do right quick. All right, hold up. Give me a second right quick, y'all. Let me text my fam right quick. Comment in the chat if you can see that gap. You see what I did. We good. All right, cool. So wait a minute. All right, so the first thing I'm doing now, I got my previous week high. I got my previous week's merch sale. Yep. I got my previous week high. I got my previous week low. Why? Because those become zones that we know the market can stand on. Right? Those become zones that we know the market can stand on. You see the gap. All right, so the first thing we see that it is still bullish. Why? Because we got clean higher highs and higher lows since late August, right? Now, here's what we do understand. We understand that our previous week high was at 27.88, and then we see our previous week low was at 26.13. Y'all see that? All right, so let me see something right quick. And then we have our SMA 20 at 25.60. So we know for a fact that that's going to also be a what? Your chart doesn't look like that on a daily on SoFi. I have no idea what to tell you then. I have no idea what to tell you then, fam. Mine look like that. All right. So we see that our structure is still intact. And that's in key. Now, here's what we notice. We see that we have this. Let me use this. That candle right there is critical. I marked up this week. Oh, man, good looking, man. God damn. Man, that's good. Good looking, boy. That could have messed my whole chart up, too. Good looking, family. Good looking, family. That almost messed my whole chart up. Ooh, moving too fast, boy. Good looking. Man, where you at, man? Good looking, family. Good looking, family. Boy, I almost messed my whole chart up just now. Way to pay attention. So this is my previous week high. Way to catch me on that. That's my previous week low. Thank you, family, for not letting me mess that up. Just moving too fast, doing too much at one time. All right, there we go. So that's your previous week high and previous week low. And that's important because you want to know where we trading at this week. Family, thank you so much. You hear me? Because, man, that was good because I was just doing too much at the same time. You want to know if you currently trading above what you would, if you currently are in the range over than what you was last week, right? You always want to know that. Now, here's what's important about that. If we notice that, here's what we notice. we notice even though we have a doji candle here, we're actually trading above. Say, hey, bring me a water, bro. Man, I appreciate that, brother. And so you always want to know if you're trading above what you did last week. Now, I'm going to tell you something that's real interesting just looking at that. Man, that's such a good save, man. Thank you for saving that. I want you to notice something. Notice how the bears brought that down. If we looking at that, the bears brought that down to 50% of that previous week's candle and then got rejected. Right? Notice how the bears pushed that down this week until 50% of last week's move. Do you see that? Do you see that? Do you see that? If you look at the bottom of that tail, it's at the halfway point of the body of the previous week's move. So do you see how it got rejected at the 50% point of last week's move? That's important to see. Do y'all see that? Can I get a yep? I see it, Trap. Can I get a, yeah, I see that, Trap. Right, the bears push that down, sellers push that down to 50% of last week's move. Do y'all see that? That's going to be key. Hell yeah, I'm thirsty. I've been talking on this shit for 2 hours. Hell yeah, I'm thirsty. Goddamn. Buyers came, stepped in at the end of the day. I was positive. Now I'm down. Buyers, sellers came in, stepped in at the end of the day. Who they stepped in at? They stepped in that. I knew it. They stepped in that NVIDIA. I knew it. They stepped in NVIDIA, bro. They just beating NVIDIA up, bro, right now. China they using NVIDIA as a stepping stone right now. They using NVIDIA as a stepping stone right now. China, Jensen Wang, you better come up with something. All right, now let's get into the daily. So our daily move is going to be interesting because we got to change the color so we can see it. And that's our previous day's low. And this is our all right, so now we boxed in. We got our previous day high, previous day low, previous week high, previous week low. Now, here's the next thing we got to do. Now we got to ask ourselves, what do we see here? Right, so the first thing we know we also see is a small gap right there. We know that got to get filled up, right? And it's just for me. So that don't blind me, but I just want to make sure I see it. Well, no, they violated that, so it ain't even much there no more. It's violated with those wicks coming through it. Why is that on now? Yep, that's violated with those wicks coming through it. All right, so those wicks violated that gap. That would have been right there. Those wicks violated it. And so now if I'm looking at this, I'm saying, okay, my support will probably we'll find a support shelf right on top of this 20-day because that's also going to be a right? So that's also going to be that 20-day is also going to be a form of support for SoFi. It's going to stand on top of that. So what is that? That's at, what my thing at? There you go. There you go. What that is? All right. So I know right here at 25.59, at 25.59, that's the thirst. So we already know at 25.59, we know that's going to be a form of support as well. So as long as we're above that, we know that's good. So also what we can see is, I like this level right here. I like this level right here at 25.52. I like that level right there because that's where it pushed off at. So you see the base right here. So if you look, I like to look at where did the move come from? Now the whole move itself came from here. Then we got some small exhaustion right here. And then the rest of this move came from up here. So right here is a level, it's not a major level, but it's a key level of interest for me right here at 24.24. And then right here, because we have a few touches right there at 25.52. Does that make sense to everybody? Does that make sense to everybody? Right? And so I just want to see what's going to happen here. So now if we close at full 2, we close with a dope with this long tail doji, and we see sellers bring it down to about 26.15. I'm good. Let's get into, so I don't really see nothing too crazy right here. It's kind of choppy. We still in the upward trend. We on top of that. I'm all right. Not really mad at it, but my 1 hour going to tell me everything I need to know if I'm looking at it from my 1 hour perspective. I think sometimes people try to make stuff out of what it ain't. I'm not kind of that person. Damn, what I did previous day, little. As long as I can stay within that, I'm all right. Let's go get money right here. All right. What do we see? All right. So I see this whole move. Oh, this is good right here. So watch this, y'all. This whole move came from that. Oh my God. So remember what we did so watch this. Watch this. On the daily, what did I say? I said, it's 24.24, right? We came to the 1 hour. That's why I love getting to the 1 hour. We get to 24.24. What do we see? We see the base of this move. Do y'all see the base of this move? The base of this move came from 24.24. So you see this whole move. All of this came from there. So now we understand that 24.24 is the lowest part of where we at. Right? So 24.24 is the lowest part of that. So now if you wanted to do something, watch this. So if you're looking at so far, you'll tell yourself 26.13. If it comes down to 26.13, now watch this. Watch how dope this about to be for y'all. Watch how much this is going to help y'all out. I'm going to take this off so you can see it. That's why you mark them up so you can see stuff like this. That's at your halfway mark right there. Now, mind you, you didn't know that. Right? Mind you, you didn't know that that was why that rejection point was right there. You didn't know that. You feel me? But when you bring it to your lowest point, that becomes a... I hope that makes sense to us. I hope that makes sense to us. That's making sense to y'all? The pop-up YouTube lives are lit. For sure, man. We here for all y'all, man. We here for everybody. We want to be able to teach our people how to go get this money out of this market, man. So people gonna ask Trap why you use that, because that was your lowest point right here. That's why this whole move was coming at. You had these equal lows right here at the bottom at 24.24. You had, the data is data. So you came from your equal lows right there, then you swung all the way up to your all-time high. And then what happened was you understood that right there, your halfway point, that's called a dealing range. That's the halfway point. So if SoFi came all the way back down, which it almost did, touch it. If it came all the way down to 2604, that means it would have retraced 50%. Yep, that means it would have retraced 50% of the move, which is nothing to be scared of. That means that long as we above that 2600, you okay. Yes, it makes a lot of sense, for sure. A lot of times people trying to talk over people's head and all that. I don't be having to do all that, man. Like, I can say it to where it makes sense to us. You know what I'm saying? So now you understand that. Now, here's what I'll look at if I'm you. If I'm looking at it again, I'm telling myself, all right, the lowest I want this to go is up in this area right here. If it breaks this, it's a good chance it's either going to come back here, the previous week's low, which was last week's low, which is 25.25. And if it breaks that, we're going to come down to 24.24. Right now, remember, it doesn't go all the way down. It'll do a type of, a little zigzag and come down. So it ain't going to go all the way down. It'll do something like that. You know what I'm saying? So, but you are right. So right now it's at 27.15. I think if it does come down, it'll come down to previous day's low, which is 26.65. That's all right. I'm not mad at that, 26.65. The thing about that is, let me take some of this off the screen. So you can see it. I just be talking in real time, so. Now, here's a key point for you. Now, remember, previous week is low from last week is this line right here, 26.86. That's the first point of resistance that you want to hold. Why? Because you see it coming up off this rejection right here. So you want to see it hold above 26.86. And then that was last week's high. And then yesterday's low was 26.63. So if you can see it stay above, I will ultimately say 26.63. If it stays above 26.63, you are right. If it falls below that, now not only are you below your 20-day, you also now have broke yesterday's low. Does that make sense? Does that make sense? Am I making sense to y'all right quick? I just want to talk to my people. You heard me? Come on, man. We got 1,200 likes in the chat, man. Come on, man. Right? So the reason why we help our previous day high and our previous day low and our previous week high and our previous week low is because that becomes moments of interest for us. That becomes areas of interest for the market. And then those levels become levels that we look at, right? Those levels become levels that we look at and say, hey, as long as we're above yesterday's low, as long as we're above yesterday's high, I'm all right. So you're looking at previous week's high was 26.86. Well, previous day low, which was yesterday's low, was 26.63. So you want to stay on top of 26.63. Right? You want to stay on top of 26.63. So that's why I go with my previous weeks, high and low, previous day, high and low. And then I could do it in my 4 hour, but my 1 hour. Now I know the area that I need to stay above and the area I need to stay below. I know what areas become areas of interest for me. Right? Also, you can look at, when you're looking at stuff like that. So if you break this, now you get into this range right here. Now, here's what you can say. This can also be, watch this. I'm about to show you something that's interesting right here. Even though this is not a low, an equal low, you also have a rejection right here at 26.13. That can also be where some orders can be at because it was rejected. Right? And so because you have two areas that are really, really similar, right? They're not that far off from each other, but about pennies. Right? They're not far off from each other, but about pennies. You got 2664. And you got 2613. That's an area of interest for you. The reason why, when you are adding the technicals to the options masterclass, at some point I can sit down and do it. It's candle close in the zone, or can it just be the wick? No, for me, you want to see a candle close. A wick means a rejection. That's what I'm about to get to right now. So because you see that rejection right there, watch this. I want to show you something. Look how that wick is at the same spot where that upturn started. So that candle that opened right there and raised up, that wick touches that area. So now we understand that that's an area of interest right there. 2611 could be an area of interest right there, right? You just want to have some idea. You want to have, I think a lot of people get mixed up because they always feel like you got to realize every pattern that happened in the market. There's over 1,000, 2,000, 3,000 patterns that happen in the market. So for me, what I'm always trying to just find is areas of interest where I can enter a play or understand where the market is going, what the market is doing, why are they going that way. Well, I understand that this was a rejection point, which means they may have some orders right here. This may become what's called a what? Demand shelf, which simply means that you want to see the buyers hold this area up, or there's orders right underneath there. There can be some orders right underneath there. You'll see them. Why do I know that, Trap? Because this was a rejection. That rejection tells me that. Because that was a rejection, I can say, okay, there might be some orders right under 2611. Let me see. Will you let us know when you update the options? Because it's going to be in there. So the red and green candle closed on the previous week high. Are those equal lows? Well, it's not equal lows because an equal low, I get what you're saying. It's not an equal low simply because lows are the same, but you can do this. You could do that to it. You see what happens right there? And now you, watch this. The minute I just did that, answer this question for me. Did that just get super clear for you when I did that? Did that situation just get super clear for you when I did that? Let me get a yes in the chat. And the reason why we can do that and say, okay, here's the range we've been in. Here's what happens now. It's simple. Now watch this. Watch how this makes sense. If SoFi, watch this. If SoFi breaks that box, what does it fall into? Our previous day low. If SoFi breaks that box, it falls into our previous day low, which means we wanted to do what? Stay on top of that. If it breaks that, our next area of interest is 2611. That's simple. 2611. Right? That's where we wanted to stay at. If it breaks 2611, it's probably going to go all the way back down to, it's probably going to either go to one or two places. Watch this. It's probably going to go there. Why? Because you see this move that happened right here. You saw it hit that and then rejected it, made that false move, made that move down, and then created a what? A base. Once it created that base, then what happened? It went up. It went into the upward move. So this whole upward move came off this base. So this whole upward move, everything here came off this base. So you can ask yourself, if it comes from 2611, it'll probably either fall here to 25, 40.43 and come all the way down to previous day low, which is 25.05. Does that make sense? Somebody say, bro, I feel like an idiot with technical analysis. Don't feel like that. I see it now, Stevie Wonder. Yes, sir. No, you should not sell no shares because you're still inside of that same range that has been trading in. It hasn't broke that range. It's still inside the range that has been trading in. Right? So you want to see it break that. So what you want to see SoFi do essentially is you want to see SoFi break this. Boom. Create a from here. And then you want to see it come right back on previous day high. And then you want to see it do that. Or you want to see it, if it drop, boom, you want to see it come here, 26.85, hold that, come back, drop on top of your box, and then come back up. Or you can see it come here, break previous day. If it breaks previous day's low, then you know one thing is going to come at least to here, which is 26.11. Now, after 26.11, that's when you want to ask yourself, all right, now I see some shit about to happen. Let me know if I'm making sense to y'all right now. Yep, the light bulb gonna go off, man. Like the light bulb, and here's the thing, man. You can't let people just, here's what happens. People can fancy talk us. You know, because people be fancy talking and because people be cursing and people be, you know, you start thinking that they know what the hell they talking about. And it's not saying they don't know what the hell they talking about. It's a difference, though, between knowing what the hell you talking about and then being able to explain it to me. For me, I like to talk slow when I'm talking about this, and I like to give different scenarios so people can see exactly what we talking about, how we talking about, and it can be a part of it, you hear me? Damn, man, 5 people give me a thumbs down. Why they give me a thumbs down, man? That's cold-blooded. Yeah, man. So that's it, man. I gotta hop on the phone. I got a lawyer call, man. So I gotta hop on the phone with my lawyer for that. Before you go, can you check out what's going on with SPY after hours? Now I'm about to head out, man. We done did SoFi. We done did a bunch of other stuff. So we'll lock in with y'all, man. Let y'all know a little more, you hear me? So let me know if y'all like this. If y'all like what we did here today. Now, why would you give me a thumbs down, fam? You down bad. Why you gonna give me a thumbs down, man? You cold-blooded, bro. You give me a thumbs down just because of that, bro. That's cold-blooded, dog. Y'all wrong, bro. Y'all treat your boy wrong, man. You hear me? Man, listen, I be thirsty, dog. All right, man. So, yeah, man, let me know if y'all like this. Let me know if y'all appreciate this type of live. I don't mind doing it. A little more, you know, go through 1 or 2 with y'all at a time. Now y'all gonna give me 2. Boy, y'all cold. Bro, y'all really down bad, bro. Why would you throw 2 thumbs downs up there, bro? That's phony, yeah. Say, that's phony, yeah. And I know you did that on purpose just now. You hear me? That's cold. Like, all right, man. Love y'all, man. Listen, I hope y'all just rock out, man. We just try to give y'all more value every day, all day, every time we live. We just try to give y'all more value. So yeah, man. Love, salute. If you want to come join the Patreon, you know, y'all know how to do it. They got the links down there. If you want to come join Trappers Anonymous, come on. Yep. Check us out each and every week, man. We love y'all. We appreciate y'all. I'm out, man.